Welcome to Kopi Time, a podcast series on markets and economies from DBS Group Research. I'm Taimur, Chief Economist, welcoming you to our 80th episode. Today, we will discuss digital finance with a practitioner at the highest level and at the national level. Serey Chea is an assistant governor at the National Bank of Cambodia. She has led the country's Let's Talk About Money campaign, which aims to promote financial inclusion, particularly among women, and has paved the way for successful incorporation of financial literacy in the general education program in Cambodia. As a chairperson of the National Clearinghouse Operation Committee, Serey has also been involved in the Bakong project, a flagship initiative of the National Bank of Cambodia focused on introducing electronic money for the interbank payment transactions. I have been looking forward to this conversation for a while. Serey Chea, welcome to Kopi Time.
Thank you for having me, Taimur.
It's great to have you, and I'm glad that you're having some coffee to go with this discussion. Great. But before we talk about financial literacy, inclusion, and the really, really interesting initiatives that you've been working on, let's start with a bread and butter central banking question. What's your view on the prevailing interest rate inflation situation?
Unfortunately, I don't have any strong view. I think it's too early to come up with any real assessment. Nobody, experienced the kind of the situations that we've experienced the past 2.5 years. The pandemic really, put us back to, go back to the very basic question, what are we doing as central bank? Really, you've got this supply chain disruption, you've got the whole country, the whole world closing. And that was something that, everyone was struggling, particularly here in Cambodia. I remember the first things that we did before even thinking about other policy is how do we make cash available in the ATM machines, right? Because we're going to lock down the country and people are going to rush to the machines and withdraw as much cash as they need, or they feel that they would need, and nobody knows how long it's going to last. So for us, being a dollarized economy, it was a very complicated question because it wasn't the kind of banknotes that we can easily print in our printing house. We had to import the cash and then make sure that, people understand that this is short term, even though, we're not even the Ministry of Health. We already, wanted to send that signal. And I'm not sure Ministry of Health at that time were, very happy with it. But we had to do something just to tame the worries and the uncertainties. But at the same time, make sure that there were cash available. Subsequently, I think we were one of the first central bank to actually take measures in terms of, allowing banks to do restructurings, etc. But that really, it helped, but it was a big blow to the country, to the economies as a whole. And then you've got the war coming out. You thought you're coming out of the pandemic. You have recovery. You thought you have tourists coming in. You will have all these supply chain resuming, etc. Because we're an export country. And so when we can't export, so we export a lot to the US and to the EU. One of the main problem is the shipment was becoming very expensive. Then the only reason is that we have something to ship to the US, but there's nothing to ship back. And so the price was double, triple. And so we thought, okay, pandemic is ending, happy with it. And then you've got the war kicking in. And now you have the rise of inflation, food prices also increase. Cambodia, for the first time in April, we've got 7.8% of inflation month on month. And this is something that we've never experienced in the past since the global financial crisis, actually. So there's a lot to take in. There's a lot to to reflect on and see, what kind of policy we can do, because we shoot all of our bullet during the pandemic, and now this is coming. We're like, okay, That's it. And particularly, when you're a dollarized economy, you have to be very creative in your policies. Right? You can't just follow, the normal standard procedures that other central bank do, because there are so many policy instruments that we are not, that is not available to us to use.
So does that issue of not having a wide degree of flexibility and tools because of the dollarization issue, which I want to talk to you in greater detail later, but just on that point, does that force the Central Bank of Cambodia to coordinate even more intensively with the central government, as opposed to a typical economy where they can do a lot of things sort of on their own?
Not necessarily. I think we have some level of independence in terms of, our monetary policies, but, the things kind of policies like, we're talking about raising interest rate before that. I mean, this is not a policies that, the National Bank of Cambodia can afford to use, because this is a rate that the central bank, this is a lending rate normally in local currency, right? And for us, because 90% of the bank transactions or 85% of bank transactions are done in US dollar. So it doesn't matter, what rate we charge for the local currency. People just don't, it won't reflect onto the market rate. So really, this is something that we have to really be more creative and think of something else to do, right? So we use, reserve requirement a lot. Try to control inflation, but the effectiveness is quite limited, because obviously you can't raise it too high. I mean, already prior to the pandemic, it was 12.5% of reserve requirement. Never heard of in any country, but it was our policy instrument. It was macroprudential. It was monetary policy instrument. So yeah.
I suppose now with the funding costs going up around the world, we are already seeing some degree of tighter liquidity, which is unfortunate for most of Asia, where, as you were pointing out earlier, we're just coming out of COVID. This is when the economy needs support, not sort of, restraint. I suppose, given the dollarization nature of Cambodia, this actually is even a greater constraint than it is elsewhere.
Not necessarily. Again, I think the capital outflow usually come when you have a very big capital market, right? Very active capital market. So money can just flow in and out. Even though we have we don't have any capital control regime, our capital market is actually quite small and not very much active. So a lot of the investment that coming into Cambodia are mostly in the form of FDI, and that tend to take sort of longer time if it were to, to go out. So it may slow down the inflow of FDI because of this high interest rate, but the outflow, on the other hand, would take some time, and it give us enough time to adjust and see what's going on. And usually, this is not a phenomenon that we have observed, all these past year. I mean, at least in my 22 years with the central bank, even during the global financial crisis, we haven't seen that much of such things, because likely or not likely, our capital market is not at the level where, money can just come in and out that easily yet.
Right. So a mixed blessing, if you will. Let's talk about the key discussion points. So let's get going with that. So you, Serey, are a passionate advocate about financial technology, and you have been featured in many publications and interviews that I've seen where you've spoken very persuasively about the need for harnessing that technology for the good of the Cambodian society. So walk us through about how financial technology is changing Cambodia in terms of access to financial services, and perhaps touching both on the services offered by the public sector as well as private sector services.
I am a passionate of financial inclusion and not necessarily financial technology, but if I can use financial technology to further our agenda of financial inclusion. So definitely we are going to do it. But I think there is a sort of a clarification to be made is that not all kind of financial technology will help promote financial inclusion. Some can actually be counterproductive and create more risk than anything else. So we need to be cautious. And definitely in adopting new technology, we want to make sure that it is going to help with financial inclusion and not the other way around. So that's very important distinctions that we have made at the National Bank, is that whatever you introduce, we're fine with it. We're happy to carve, certain specific rules and regulations just to protect consumer interests, but you have to prove to us that it served the purpose. And I remember the first time we had our first mobile money, so e-wallet provider in Cambodia, was in 2009. And before that, the only other e-wallet that we've heard of and who's successful was M-Pesa. And so learning from the experience of M-Pesa, we actually I think it was with the IFC. So we went around and did a study tour. I mean, not me personally, but the bank went around to do a study tours of in Kenya, in South Africa, and in the Philippines, trying to see, when you introduce these kind of product, what kind of approach, what kind of regulations a regulator should impose. And we had to look at Kenya at that time. It was very free. The e-wallet provider could do pretty much whatever they wanted, and that's how it was able to grow that fast. And then you've got in South Africa where it was very regulated, and then in the Philippines it was somewhere in between. And so coming back to Cambodia, we thought we wanted something in between. And at that time, for me, I was a bank regulator back then. And I said, well, the moment you take money from the people, you are a bank, right? And therefore, you need to be regulated as a bank. And this company, which is, barely a technology provider, said, but we don't have the capital of a bank. And we're not a bank. We're just, taking this deposit it's an earmarked deposit in a way, right? And it was not, a saving instrument. And, 2009, we didn't know about all this. And I was absolutely, I said, you have to ask for a license of a bank. At that time, it was about it's about 13 million in capital, I think of. And they said, we can't do it. And so I said, well, first of all, you don't want to get the license. Second of all, we as regulator, we don't know what you're doing. This is so new. But we understand that you are going to help a lot of people and bring the informal sector into the formal sector. So we strike a deal, and this is very interesting because this is the regulator striking a deal with the regulatee. We say, okay, since you are a company, if you can find a bank who can guarantee all your operations financially, operationally, risk management wise, then we will allow you to do it. And so they managed to find a bank at that time it was ANZ Bank. So ANZ guaranteed all their operation financially, risk management, because I don't know how, as a regulator, we're very honest. We said we don't know how to control you. It's a new animal. But ANZ at that time, so this company was a subsidiary of ANZ. And so I said, if you can guarantee everything, I'll let them try. So ANZ then come out and they say, well, I can guarantee everything. And it worked. And when it worked well, we realized, okay, now it's good enough for us to think of a proper regulation to manage these kind of operators. And so we issue regulations on licensing of, we call payment service provider in 2013. And since then, we have I think now probably 25, 30 payment service provider in the country. There's so many new services coming in. And that's how, the industry sort of boom since then.
And so far, the experience has been largely positive in terms of, the risk management framework that you laid out has managed to stop people's sort of, savings remaining safe.
I mean, it's not. I wouldn't say that we have a perfect rules in place, but what is important for us is to make sure that the money is safe, the message, so the technology is safe, and that there's a proper consumer complaint mechanism in place and consumer protection, right? There's three things that we look into. And in terms of deposit, we have quite a strict regulations where, if we are going to regulate you as a mere technology service provider, then you can't intermediate the deposit that you receive from the customer. So whatever money that they receive from the customer, the float of the wallet will have to be 100% deposited with a bank. And that is usually unheard of, because I think in some jurisdictions, the company can actually use that money to intermediate, that is to lend and to do other things.
Right. So what about the international angle? Because we are seeing social media companies like Meta and almost certainly Google through WhatsApp, becoming more and more interested in offering payment services through messaging network. And I hear from other central bankers that they worry about the cross-border implication. They worry about privacy as well as ability to regulate when these things become part of an international platform. So what is the Central Bank of Cambodia's view in terms of allowing this global social media platforms to get into the payments business in a domestic economy?
Well, at the moment, we don't have that phenomenon yet. And I think if it were to come, we will have to discuss the type of service that they want to provide. I mean, at the end of the day, it's not to prevent them from doing it, because you can't control this big tech, right? One thing is to, have a dialogue and see what we can do together. And I'm sure this kind of company, they don't want to do anything outside of the regulatory scope, right? So we have to sit and discuss, what exactly they want to do, and see how it can be done safely for the people. And at the end of the day, we have to understand what is it that they want, and they have to understand why we as regulator are worried or want them to do certain things. Because if we don't understand each other's goal, then we tend to have this misunderstanding, obviously, but do think that can be actually detrimental to the industry.
Right. So let's talk about Bakong. And I'm going to assume that many who are listening to this podcast or watching this YouTube video will know little about it. But I hope that by the time this conversation is over, they'll want to go and Google and go deep into it. But I would like you to sort of, walk us through the genesis and use case of Bakong, please.
Yeah, so Bakong was interesting because we start looking into blockchain technology in 2016, and I think only because we wanted to understand what it was. And I remember when we were one of the first central bank again to come out and say we don't recognize cryptocurrency as a currency, and we do not allow cryptocurrency to be circulated or traded in the country. And this rule still remain, right? And so we received criticism about, our central bank being backward looking and etc. So I thought, why not we, ask a team, and why not we look into it and try to understand. And while we look into the technology, there's a challenge that, we've always wanted to solve, which is financial inclusion and interoperability. We have banks who can somehow talk to each other through the central clearinghouse with the central bank. So let's say you're a customer of DBS Bank and you want to transfer money to UOB Bank, right? And usually you will send a message to DBS. DBS has an account with AMEA, as clearinghouse. then Amias credit UOB account, then UOB credit the customer account or your beneficiary account, right? That's how it normally works on our end. And we have about 50 commercial banks. And so everything was cleared at the central bank level with a settlement account and so on and so forth. And also we don't have an RTGS system. So all these clearing are done twice a day. It's good and bad at the same time. It saves on liquidity because it's always done on a netting off basis. But there's also risk of, it is payment risk, right? That when the time comes to settle, the banks won't have enough liquidity. So this is how it worked between banks. And then you've got the payment service provider that I mentioned to you earlier, right? Who we regulate as technology service provider. They can't use the deposit. There's not much that they can do. And therefore, we have always regulated them as such. There's a much lesser sort of stringency than we would normally regulate banks. And so the payment service provider acquire a lot more customer than banks, right? Because open a wallet is so much easier than going to a bank and open a bank account. The problem with this payment service provider is that they are not talking to each other. So there are bilateral agreement between, two different payment service provider, and their respective customer can send money to each other. But the whole ecosystem was just dysfunctional, where everyone tries sort of to guard their customer base, because the moment you open your customer to be able to send money to another customer, then they will risk of losing their customer, right? And so it's equivalent of you using, I don't know, Singtel, but you can't call your family member who's using what is the other service? StarHub, right? It's frustrating, particularly in the financial inclusion. From a financial inclusion perspective, it's almost like you put money, but you can't use it, whichever way you want. And so this is where we wanted to bring the two industry together. First of all, the payment service provider together and the banks together with the payment service provider. And there was one solution to do it, was to why not bring the payment service provider into the central clearinghouse so that they can then settle with the other institutions. And the problem of bringing the payment service provider into the central clearinghouse is that they now become part of a much bigger system. And it can become systemic in the sense that if a payment service provider don't have liquidity to settle, then all the daily settlement will have to come to a halt, right? And so this also means that the payment service provider has to set aside liquidity in the settlement account. They have to manage it in the same ways as bank would normally manage their settlement account. And it become then, it beat the purpose of us trying to regulate them as a company, as a technology provider in the first place, because we want, the compliance cost to be low so that, the lower cost is passing on to the people. So this is when blockchain technology come about. And this is where I find it beautiful, the peer-to-peer nature of blockchain can solve the problem. So instead now of bringing them into the central clearinghouse, we introduced Bakong. And this is like a digital money, but issued by the central bank, right? So now payment service provider, they can become a part of the whole ecosystem. First, they have to have some digital money, and I don't call it digital currency, but digital money on hand. And then they can then redistribute it to their user. And the user, once they have this sort of digital money in hand, they can send it to any other users whose banks or whose service provider is a member of Bakong. And so you create this interoperability. I mean, I don't have a chart to show you, but I do. I can send you later, and you probably can edit the video. But and now everyone can talk to each other. We have about 32 institutions now going live, and 20 more waiting to go live. And with that, everyone can talk to each other, and it's become so much easier now for people in the rural area who open a wallet account to send money to their children who study in the cities, or children who work in the cities to send money back to their parents in the rural area. And that's how you bring financial inclusion, and that's how you try to reduce, we think we try to reduce the gap between the rural and the urban, where before that it was almost impossible for these two segments to talk to each other. Of course, you have a messenger or a taxi driver who would literally carry cash. But now it becomes so much easier, so much more efficient, faster, cheaper to send money to each other. And ultimately, what we want to achieve is to allow our migrant worker in foreign country, right, to be able to send remittances home that easily and that efficiently to their family back in Cambodia.
It's absolutely fascinating. I remember reading a speech by a deputy governor in Bank of England a couple of years ago, where his argument was there's no need to have in the UK a system of peer-to-peer clearing, because the RTGS system that the central bank offers to the rest of the economy, both to commercial banks and then by filtering to the rest of the economy, clears transactions cheaply, instantaneously, and so on. Now, you prefaced your discussion by saying that you do not have an RTGS in Cambodia. So do you feel that you're sort of leapfrogging the conventional central banking by embracing blockchain, or the RTGS could be also another development that you could embrace?
Well, sort of. And I think the level of development play an important role. I think the system that we have currently, as it is, without improvement, would probably not be able to handle transactions, in the capital markets. But because we have a smaller capital market, as I mentioned to you, and daily transaction is actually very, very low. Most of the transactions that would not normally require, these real-time settlements are in the banking sector.
Right.
And so we can handle it. But what we think we can do, and thankfully, we have a level, we're in a situations where things are going slowly, improving slowly. And so it gives us time to also improve our system. And we hope that we can use Bakong for larger value transaction, which is, real time and peer-to-peer as well. This is something that our team is looking into. But definitely coming back to your point that for developed economy, I personally don't see, what more they can do, because it is already so efficient with the way, people are transacting and transferring money. I don't know how this peer-to-peer is going to do anything better in terms of domestic or retail transaction, but definitely I could see the possibility of, trade settlement in central bank digital currency that would probably change the way we do trade, right? Because currently, for an SME to be able to trade, you need so many things. You need so many documentation. There are so much fees involved. And for banks, smaller countries, or developing countries like Cambodia, local banks to find correspondent bank who's willing to work with them, et cetera, and et cetera. It's so complicated and it's so costly. With a CBDC, and this is if, two countries CBDC can talk to each other, trade settlement would be so much simpler. And so much simpler also in the sense that if you can have, one-on-one conversion. Let's say if I trade Cambodia trade with Singapore, I can send my real, our currency is called real, right? I can send real and, automatically, the Singapore side can convert it into Sing dollars and vice versa. Then you would see, the currency or trade settlement would change. You would see the dynamic of trade settlement in terms of, the different fees and structures. All the middleman will be gone.
Absolutely. Serey, one of the appeals of the original architecture of blockchain was the verifiability and tractability, that if you run a series of transactions, the ledger keeps a record of that. So dispute resolution, fraud detection, those sort of things become easier in such a transparent framework. So have you experienced that over the last few years?
In terms of...
say the two peers, have some sort of a dispute, and the fact that, all the transactions are tractable through the blockchain allows those sort of disputes to be settled pretty easily?
We haven't experienced this. I think the things that we have really exploited from blockchain is the peer-to-peer side. But next month also, Cambodia's government is planning, they're discussing planning to issue government bonds. They haven't issued government bonds for a very, very long time. And I think this year they plan to do so. And as the central bank, we are their agent. And what we plan to do is to issue it on blockchain technology. And so we'll try to do this payment versus delivery functionality, include that into the instrument. And we've already tested it's working. And so when that's launched, then I can probably tell you more. But even with that, you imagine how you can eliminate all the custodian, functions or the fees that you have to pay. That's the beauty of blockchain, right? I'm still, people ask, and I'm still not for crypto. What's happened to the cryptocurrency lately? To me personally, it's there's always a confusion at first. When Cambodia introduced this, they say, well, the central bank is against cryptocurrency, but they're doing something themselves. I say, no, we're using the technology, blockchain, cryptocurrency, not the same.
Right.
And so I am always fascinated with what blockchain as a technology can do. But I don't think, cryptocurrency is something that is worth encouraging, at least at the state where they are right now. It's a good sort of a gambling instrument. People are making money only because they know when to sell, the right time to sell and the right time to buy. Not everyone has the sophistications of understanding all this. But I think blockchain is there's so much to it that we can explore. And I'm really excited that, at the bank, we are doing a lot, trying to, test different, case, what we call it, use case of blockchain technology. And hopefully we can share that experience to others, developing countries.
Another aspect of blockchain that, especially in the crypto world, has been appealing is the ability to be anonymous or pseudonymous. I'm assuming in your framework, you don't allow that, and all peers have to identify themselves.
Yes. Technology is one thing, but how you design your policy behind it is even more important, because technology can do a lot of things, but if you don't know how to use it properly or design a control sort of function measures properly, then it can be quite risky. And so what we do with this is that, first of all, even though it's blockchain, it's a closed loop blockchain. Then again, I've got technologists coming to me. Well, you then beat the purpose of using blockchain, because blockchain needs to be, it's supposed to be public. And I said, well, I don't need it to be public. I need it to be closed loop. I need it to be fast. If it goes, first of all, there's confidentiality issues. I don't want it to go public. Second of all, I need it to be fast, so I don't need it to go public. So I said, closed loop suit me, right? So you just adjust the system to whichever way you want it to be. Second of all, We have designed it in such a way that whoever come into the system need to be identified. I mean, I can choose not to, but we have designed it in such a way that if you want to be into this, be a participant, you have to identify yourself. And so we make sure that banks identify their customer before they are allowed to use Bakong properly. We have also made it a way that with the system that we issued, it could also be that the central bank can be the one who do the KYC. But we've designed it in such a way that the central bank will not do the KYC. The banks will do the KYC. Right? We wouldn't know who is who, and that's resolve the problem of central bank knowing too much about me. Right? We have also designed our system in such a way, when people call Bakong as a central bank digital currency, we've designed it in such a way that the liability will not to the central bank, but to the banks. Right? These are just things that you can design, the system can tell you something, but you can make the rules yourself.
Absolutely. So I want to get into that issue because now several times you have made a distinction between what you call digital money versus what many others call central bank digital currency. And I suppose it is that liability part that you are not issuing any new currency into that Bakong system.
No, it's banks will have to exchange their fiat money.
Yes.
Against the digital version of it, right? And so when the money is pull in, it's pull in, right? We're not issuing new, and also because we issue in US dollar,
right?
So I mean, Cambodia can't issue US dollar, obviously, but this is just transforming, and this is easier to understand. So it's just transforming your paper money into the digital form, right. And that's it. And when the paper money is taking in. We're not intermediating those paper money back into the economy. That's a very big distinction. And the second, the main was actually the number one distinction is the central bank liability to it. So as I mentioned to you earlier, that banks or financial institutions in general who want to be part of it need to exchange their own fiat money with the central bank. And so the liability is between the central banks and the banks, right? And once the bank distributed to their user, their customers, the liability now it's between the banks, the financial institutions, and their customers. The central bank will sit at the bank. We only owe to the commercial banks, not directly to the end users. Even though the technology is such, this is the rules that we've decided that this is how it's going to spell out.
Right. So in my mind, I think of it as basically Bakong as a digital marketplace where people are buying tokens and using the tokens to intermediate because that's the medium of exchange.
Yes, that's the way to explain it properly. But again, people tend to confuse. Back then, it was blockchain equal to cryptocurrency.
That's right.
Now, if the central bank use blockchain, it's equal to central bank digital currency. And so we have to make that distinction. But also, to me personally, I think that the categorizing, central bank digital, it doesn't really matter. What matter is, does it serve its purpose?
To me also, central bank digital currencies, at least at the wholesale level, have existed from the beginning of digital central banking. So, the liabilities are not, central banks are not sending boxes full of cash to banks. They just say, let there be money, and it just shows up as the reserves of commercial banks. It's the retail part that seems to be the new point of discussion for everywhere. The retail level, can the central bank have their currencies and liabilities show up in the e-wallets?
Yeah, I think for the non sort of people who are not in this field, there's a lot of confusion between digital money, digital currency, cryptocurrency. There's so many terms that it got confused, and we don't know what to call what. And I think that's confusing, and it can be dangerous because you sometimes you describe something that it is not.
Right. But let's talk a little bit about the central bank digital currency angle and whether there are use cases for a country like Cambodia in your view? So you were talking about at the very beginning of this discussion, the challenges that you faced at the beginning of the pandemic and the need to furnish ATMs with plenty of cash. Is there, and I thought that, in the next crisis, invariably there will be one, that there could be a digital solution to a situation like that?
Digital solution to a crisis?
So unlike, say, for example, in Singapore, everybody digitally received money from the government of Singapore as soon as the crisis started because, there's a government link to people's bank accounts and so on. So and it didn't have to be, central bank digital currency because Singapore doesn't have one. It was just digital money, to your point. Could you see, as opposed to, just furnishing cash to ATMs, could there be other solutions?
Oh, there's the adoption rate of digital payment actually boomed during the pandemic. And I've mentioned to you earlier about, how initially we worried about cash, right, being available in ATM machines, etc. It turns out that, people are so much more comfortable using their mobile phone to pay transactions. And that's really helped us as a central bank as well. During the crisis, the pandemic, our government has, of course, dispersed, direct, it made cash transfer directly to vulnerable segment of the population. And that was done through the mobile money platform. Right? And people are happy because it's fast. It come in full, right? There's no leakages along the way, which happen, if you were to give cash. So people are much happier. It's more transparent, much more efficient. And this is going forward, what the government is going to adopt is that trying to do things digitally more. So I hope that it will continue, and I hope I recently shared Cambodian experience to. I was in Morocco 2 weeks ago at the meeting for the governor from the French speaking country, governor from Central Bank of French speaking country, and I did it in French, very terrible one. And after the presentation, I've got central bank governors from Tunisia, Mozambique, Mauritius, and Madagascar coming and say, we want to know more. We did something, but it wasn't like yours. But apparently they were studying. We are launching it for 2 years already. And I said, look, I'm happy to share. What we experience may not be 100% applicable to your sort of situation, but if there is any challenges or any that we can share with you, I'm happy to do so, because going through this, obviously we encountered a lot of obstacles, and if we can share those obstacles as well as our success to them and they can make something out of it, we're happy to.
Okay, but what about carrying this idea to its full limit, which is central bank digital currency, where you actually issue digital liabilities that show up in the e-wallets of Cambodian citizens? Would you ever consider going that far?
I won't exclude anything, I think, because, but at the end of the day, is there a real use of it? Is there a real benefit? Are we ready for it? Right. And as I said, we love technology for it to solve our problem, but we definitely not want it to come and mess up even more, and so definitely when a time comes and we see the need for a full-fledged CBDC, then definitely that would be something that we will consider. But at this stage, I think we're happy with whatever we have right now, and I think eventually, if other countries move, particularly developed one, move towards CBDC and there is interoperability between those CBDC, then this would be something that we as a smaller country could benefit for trade settlement, then definitely we'll go that direction.
Right. I'm really intrigued by some of the pilots that the BIS have done with a few central banks around the world. You made the point earlier that as far as trade payments and settlement is concerned, a blockchain-based business system could probably cut down on a lot of the frictions that exist in the current system. Similarly, for just the system of trade credit itself, because that is also subject to huge information asymmetry and costs and cross-border payments. So I'm also intrigued, and I hope that being at the frontier of central banking, as Central Bank of Cambodia has been, that we will sort of look to you to introduce some of these things in the coming years and decades. The issue of dollarization, you have brought it up several times, and I'm particularly intrigued because within Southeast Asia we actually don't have too many economies with that attribute of Cambodia. So, in your view, how does it help or hurt Cambodia?
Oh, I mean, for those of your listener who don't know what Cambodia, we've been through civil wars for 30 years. And then we were under sanctions for 10 years right after the war. And then the country started to open up in 92. Even in 1992, we were still having, civil war along the border. And then 1998 that we have completely achieved, full peace. And very relevant today, peace is very, very important, something that we tend to take for granted. But anyway, so dollarization came about in 92 when, it was a blessing at first. It's like a baby, you give birth and the baby needs milk. But eventually, as the baby grow up, you have to wean milk with other solid food, right? And that is the same, because when we came out from sanctions and wars and etc., people were saving in gold, right? And so US dollar was, the stable currency that, everyone was looking up to, and it was much easier to use than gold, And so it was a very good sort of introduction. We didn't intend to introduce US dollar to the economy, but because the United Nations for Transitions came and helped us organize the first general election, came in, and the what we call it, the blue casket man brought in US dollar. It was just spreading across the countries, and people adopt that as their own currency. And so the adopted child then now become the favorite of the people, and so that's how dollarization came about, and it helped stabilize the macro economy a lot, because trust there's more trust into the US dollar than our own local currency back then, and so it helped bring in confidence, investors, and it helped to bring saving into the system, because when we allow people to save in US dollar in the banking system, they save. But if we wouldn't allow that kind of foreign currency saving, they would probably just, take it out of the country or, do something that is unproductive. But eventually now, as the country grows, we realize that it also does limit, as I mentioned earlier, the role of the central bank to intervene in the economy. I told you about the policy rate. It could also be, the role of central bank as lender of last resort, right, where it's very limiting. So this is why in our strategy, it has always been not de-dollarization, but encourage the use of local currency. Because you say de-dollarization, it means it gives to understand that you want to take dollar out of the economy, which is not our intention, because we do see, the benefit of having some level of dollarization, but we also want to encourage, we wanted to encourage people to use more of the local currency. So instead of the current state of 90-10%, we want it to be 20-30% to 70%. So that's what we're trying to do, and this is our strategies going forward. And this is why with Bakong as well, one of the the intent behind is to encourage the use of local currency. And people ask me, but how? You also issue it in US dollar, right? And I said, because people always think that dollars is easier, because when people have to, the interesting thing is that Cambodia has a very stable exchange rate, very strong, low inflation rate. I mean, so far for this period, and very strong, economic prospect. And this is all the fundamental you need, for stable economy. And so you would think, with this kind of indicator, people will switch back from US dollar to local currency. But no, they don't, because they're so used to US dollar that they even lose the notional value of our own local currency, right? And because our local currency come with many zeros behind, right? $1 is equal to 4,000 real. So there's so many zeros, they find it inconvenient to use. And so we think that if we can introduce, a form of local currency in a digital form, then maybe it would make it easier for people to transact. And in fact, we saw increase in transactions in local currency in the digital platform thanks to the existence of Bakong, because now, unlike e-wallet where you can choose one account, right? When you open a wallet account or bank account, you choose, I want US dollar. Right? And obviously, if your income is in US dollar, you open a US dollar. People would not have thought of opening account in local currency. With Bakong, the moment you download, you are given a local currency in it. Like even you don't ask for it, we give you one, right? We offer you one. You don't have to ask. And so when people see this, a certain, emotional sort of attachment to it, so they would want to try it, they would want to test it, they would want to use it as well. And that's how, we want to sort of wake up this dormant sort of part of their, not brain, but probably heart, and see the local currency as more than just local currency, that there is a notion of national identity embedded to it as well.
And any progress so far? Are you seeing that 10% becoming like 11 or 12%?
In the banking system, it is very slow improvement. In the digital payment, there's a significant increase, although, in terms of proportion, people still use US dollar to settle more. But the amount of local currency used to settle has also increased significantly, from almost nothing to a level that we're quite happy with. So if that continues to progress, I think it's going to be a long-term kind of effort. It won't happen overnight. But I think it's very important to change behavior than to force, to get people to change their own behavior than to force them to do something. And it's long-lasting as a measure.
Would it make sense to take 2 or 3 zeros off the real?
So a monetary reform is possible, but it's going to be very costly. I think one country has done it is Turkey with the lira. And I was in Turkey right at the middle of all this reform, and it can be very confusing for tourists. It's confusing for the people. You have to change all your accounting system and IT system, because obviously now there's no more 3 zeros. That is something that we haven't really thought of, even though it was suggested, because we thought it's not worth the cost, right? If now everyone moved to digital, I can just make the 3 zero in a bracket up somewhere and people will still see one digit.
Right. Finally, we touched on this earlier, and I don't think you're that worried about it, but because there's so many headlines about it in the news these days, I'd like to hear your view. So crypto is a wild world. We've seen huge wealth accumulation in the crypto space in the last couple of years, and we're seeing major wealth destruction in the crypto space. And my understanding when I travel around Southeast Asia, that there are many individuals who have gotten involved in crypto trading and probably made a lot of money in recent years and are losing tremendous amount of money this year. Whenever an asset class goes through that sort of volatility, there are some systemic implications here and there, leverage blowing up or banks getting saddled with bad loans and so on. Are you worried about any systemic implications of such sort?
As I mentioned earlier, we don't allow the trading of crypto in Cambodia, and we don't allow banks to get involved in directly or indirectly with anything crypto. So in a way, I think we sort of create one frontline sort of defense. But we can't guarantee that individuals don't hold it privately, right? And people are holding privately. We're not going to arrest them or seize it, but they can hold it privately. But it has been warned, and this is a joint statement between the Stock Exchange Commission, the police department, and the central banks that because there used to be a lot of fraud happening, right? And then we announced that you're not allowed to trade publicly. If you want to hold it, you hold it at your own risk. Banks are not allowed to be involved. The banks can't help, exchange or whatever. Even if a company they come to know about is involved, come and want to have a relationship with them. If they knows about it, they shouldn't, get involved with it. So that was the rule. I think for Cambodia, risks to the system would be very minimal, but I think definitely there will be individuals who are going to lose a lot of money.
Final question. Probably should have asked you this earlier, but we got sidetracked with the fascinating subject of digital money. Is the issue that we touched upon at the very beginning when I was reading your bio is financial inclusion, particularly women's financial inclusion. We've talked about Bakong's role, but in general, other initiatives that are close to your heart?
Yes, so we work, we've committed to reduce exclusions of women from 24% to 12% by 2025. We've worked, a lot with the Ministry of Women's Affairs to educate women entrepreneurs about how to access financing, how to manage their financial, how to put up a financial statement, basically. But what is interesting, something that I think number may not tell us everything, is that in Cambodia, women in the microfinance sector constitute about 80% of the borrowers. That's a lot, right? So women accessing, small funding isn't an issue. But if you look at the banking sector, then the percentage of women having access to a bank loan becomes smaller. So this is something that we try to work on and how to help women, graduate to a bank loan rather than just staying at the microfinance loan. So that's something that we try to do. The other things that I mentioned to you about what that number may not tell you everything is that even though at 80% of women borrowing in the microfinance sector, we're not even sure that the money actually goes to the women and that they are not actually just a frontliner for the man behind, right? This is something that we need investigation because what we realized is that when we did but another company did a survey, but it's a much smaller sample, although we need to further investigate. Men tend to open saving account more than women, right? And so when we ask the men why they open what is the purpose of opening their saving account, they said they open saving account to repay their loan. So this is counterintuitive, where you see women borrow more, but it's actually the man who opened saving account to repay the loan. So that's something that we probably need to investigate. But definitely, I think that if women have access to finance and be independent, the whole society will benefit. I mean, there's many studies about, how women use her finances as opposed to men. I mean, not to discredit men, but women tend to spend it more on children, on a household educations and healthcare. And this is very important for me also personally, from a personal experience, because something that I try to work. My youngest son, who's 4.5 now, I adopted him from a woman who was a migrant worker and who was sending home money while he was working in the cities, and the money was mismanaged by the family because the father was an alcoholic, the brother was a drug addict. And one day when this woman when she fell sick and she couldn't work anymore, she went back home and there was nothing at home. It was the house was in shambles and there's nothing she could rely on. So all her hard work just gone wasted, and she started getting depressed, right? So depressions and all these kind of mental issues was putting her in a very miserable situation, and then she got raped twice. And so the second was a son from whom I took over. But I just realized that when this woman, as a migrant worker, first of all, she needs a much better way to remit money home. And this is why we're working on Bakong, is that we want to make sure that women in particular are able to send money directly to the service provider rather than to a member of the family who may misuse her money or hard-earned money. So if she wants the house to be, renovated, then she should be able to send money directly to the construction workers, right, immediately, or she should be able to send money to the hospital bill or to the school, right, rather than passing through, different people who may mismanage her money. And in such a way, this is also empowering, right? And then if you look at it, she was the only person as a woman who was feeding the whole family. And so if everything is well managed, this woman can live, the living standard of the family. And the reason why she was depressed in the first place was because her neighbors, the girl who was, in the village, who left the house around the same time as her, their family were doing fine. They have a much better house, they have a motorcycle, they have a pair of, cattle, and this is what really made her depressed, was that everything she's done compared to her neighbors, compared to the other girls in the village, has gone to waste.
Serey, there are two aspects of this conversation that we have had that make it rather unique among the 80 conversations I've had in Kopi Time. Firstly, you may not have noticed it, but there's bird song in the background. And I don't think I've ever done a podcast where I've heard the sound of bird in the background. It was fantastic. And secondly, you put a human face to the issue, which sometimes becomes a bit esoteric when we talk about digital finance or technology or financial inclusion. So I really, really appreciate you putting a human face on some of these, top-down work one does. Serey Chea, thank you so much for your time and insights.
Thank you.
It was great to have you, and thanks to our listeners too. Kopi Time was produced by Ken Delbridge of Spy Studios. Daisy Sharma and Violet Lee provided additional assistance. All 80 episodes of Kopi Time are available on Apple, Google, and Spotify and all other major podcast platforms, as well as on YouTube. As for our research publications and webinars, you can find them by Googling DBS Group Research Library. Thank you and have a great day.